Dan Deming of KKM Financial joins us as we begin a fresh week. Always good to have you on the show.
Thanks for having me.
Start us off. What do you think here?
Earnings.
Absolutely. It's the big one.
Banks. And the expectations are for a year-over-year beat. So coming into the earnings cycle, the banks are expected to have a nice quarter.
What do you think about the XLF here?
I think, 28, the high end of the range, and so I think that there's still some more upside here, actually.
You do?
I do, because the banks are in a position here, they've been cutting costs, they've been having to ride this wave with the Fed, but it's really more about the steepness of the yield curve than dropping interest rates, and I think that that's an important point to make here. As long as we see that yield curve continue to push out, and we did see it move last week significally, Angie, to the bank's favor.
Right, higher interest rates, more money for the banks.
And the short end of the curve flattening and coming down with a higher end holding up. And so if that continues, even if we see rate cuts here in the next couple of months, you would expect that still will benefit the banks, because that's what they really need to be able to take advantage of the net interest margin.
Dan, I have to tell you, every trader we have spoken to on our show so far has been bullish on the banks going into this earnings season.
Yeah, and so that's a little bit of a caveat. So I think I'm always wary of everybody being on that side. But you'd have to say, based on every other sector, that they are in a good position. Passing that stress test a couple weeks ago, Angie, and now they get to buy back more shares and increase their dividends, so they make them more attractive.
We will be watching. Thank you.
Thanks for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.